20%. That is how big a move the options market thinks one stock on my watch list could make this month. Another one, barely 6%. Same week, same market, wildly different risk. Coach B here, and this is the week ahead. This Tuesday, JP Morgan kicks off earnings season, and the options are only pricing that 6% move on it. Last week was quiet, a slow grind higher with the NASDAQ leading and the VIX drifting down to a calm 15. That quiet ends now. Starting Tuesday, the biggest banks in America report, and that same Tuesday morning, we get the June inflation number. So this is the week the market stops coasting and starts reacting. Let me walk the 5 names I'm watching, the real chart, the real option chain, and how I'd think about each one by time frame. Let's get into it. First up, the name with the hardest catalyst this week, JP Morgan, ticker JPM. It reports Tuesday morning before the bell, and it kicks off the whole earnings season. Look at the chart. It's been grinding in a tight range, roughly 309 on the low end up to 343, and right now it's sitting at 336, near the top of that range, walking into the print. Now here's what the options are telling you. At the money, implied volatility is only about 26%. And the straddle that's buying the call and the put together prices in just under a 6% move over the next month. That is calm. The market is not bracing for a blow up here. It's treating this like a normal bank report. So how do I think about it by time frame? For a day trader, Tuesday morning is the event. The report drops pre-market and the stock gaps. That's your volatility. For a swing trader, 343 is the line. A clean beat that clears the range high is a different story than a miss that sends it back toward 309. For a long-term investor, one bank quarter rarely changes the thesis. What you're really listening for is what management says about the consumer and loan losses, because that reads across the whole market. Second, the AI leader that just took charge, NVIDIA, ticker NVDA. It bottomed near 190 at the end of June and has ripped right back to 211, closing the week just under its high of 214. This is one of the names that actually led last week. The chain here is more alive than JP Morgan. At the money, IV is around 38%, and the straddle price is about an 8.5% move over the next month. For a day trader, that's real range to work with intraday. For a swing trader, 214 is the level. A clean break to a new high says the AI leadership trade is still on. For an investor, this is the bellwether, as goes NVIDIA, so goes a lot of the AI complex, so it's the one to watch even if you don't own it. Third, the top mover on the whole board last week, Broadcom, ticker AVGO. This one ripped almost 11% from a low around 356 all the way back to 400, pushing right up against its high of 415. It's the cleanest uptrend on this list. The options are pricing more than NVIDIA. At the money, IV around 49% and an expected move near 11% for the month. For a swing trader, 415 is the number. Hold above it, and this is a stock making new highs, the strongest kind of chart there is. For an investor, this is the other half of the AI and chips leadership, right alongside NVIDIA. For a day trader, that higher IV means bigger swings than JP Morgan, so more room and more risk. Fourth, the retail favorite, Tesla, ticker TSLA. Tesla sits at 407, right in the middle of a wide range between a low around 369 and a high of 433 from earlier this month. Unlike the banks, Tesla does not report this week. Its earnings come later in July, so this week it's a momentum name, not a catalyst name. At the money, IV is around 47%, and the expected move is about 10.5% for the month. For a swing trader, 369 is the floor and 433 is the ceiling, and it's sitting dead in between, which is the hardest place to trade. I'd want a break of one side before committing. For an investor, a normal pullback and bounce inside a range. For a day trader, plenty of intraday range to work. Fifth, and this is the one to be careful with, Rocket Lab, ticker RKLB. We just spent the whole last week episode on this one. It crashed from a high of 118 down to 81, a 19% drop on the week, and it's now sitting right on its low of 79. Two things hit it: an $8 billion deal to buy Iridium, and the CEO selling around $286 million of stock. Now look at the chain, because this is the tell. At the money, implied volatility is around 94%, and the straddle is pricing a 20% move over the next month. That is more than 3 times what JP Morgan is pricing. This is a stock the options market thinks could go almost anywhere. For a day trader, that's the whole appeal. Huge range. For a swing trader, 79 is the line in the sand. Lose it, and there's little support below. Hold it, and you might get a bounce. For a long-term investor, honestly, I'd let the dust settle on the Iridium deal before doing anything. An insider sale plus a big acquisition is a lot to digest, and the 94% IV tells you nobody knows where it lands. We are doing a full breakdown of this one midweek. Now step back and look at the whole board side by side, because this is the real lesson of the week. Look at the implied volatility. JP Morgan, 26%, Nvidia, 38, Tesla, 47, Broadcom 49, and Rocket Lab 94. Same watch list, and the market is pricing them as 5 completely different animals. A bank the options think will barely move, and a space stock the options think could swing 20%. That number, the expected move, is the single most useful thing on an option chain because it tells you how big a swing you are being asked to pay for before you ever place a trade. Match the name to your time frame and your risk, not to the headline. Now the calendar, because this week actually has one. Unlike last week, Tuesday morning before the bell, the big banks report. JP Morgan, Goldman Sachs, Wells Fargo, and Citigroup all at once. That is the official start of earnings season. And here is the key: that same Tuesday morning at 8:30, we also get the June inflation report, the CPI, landing right alongside those bank earnings. So Tuesday is the huge day. Then midweek, more names report, including Morgan Stanley. And sitting out on the horizon, not this week, but the clock is ticking, is Moderna's real FDA decision on August 5th. So here's the one macro risk that can move everything, and it's that Tuesday CPI. Remember, the Fed minutes last week leaned hawkish. 9 of 19 officials still see a rate hike this year, and they said inflation risk is tilted up. So if Tuesday's inflation number comes in hot, it validates those hawks, and the most rate sensitive, high beta names, Rocket Lab and the growth names, tend to get hit first. If it comes in cool, it takes the pressure off, and those same names tend to lead the bounce. Same number, opposite reaction, depending on which of these 5 you are watching. The banks give you the earnings picture, the CPI gives you the rate picture, and together they set the tone for the rest of the month. Quick reminder, this is education, not financial advice. I am not telling you to buy or sell anything. Do your own research. Everything here is a teaching example to show you how to read a setup and how a time frame changes the answer. That's your week ahead. Earnings season kicks off with the banks, a big inflation number the same Tuesday, and 5 names each pricing a completely different amount of risk. If this helped you walk into Monday knowing exactly what is happening, subscribe, and I'll break down next week's setup for you too. And drop a comment. What ticker do you want me to cover next? Good luck in the markets, no matter what stock you're into.